Hey, everybody. Good morning, or wherever you're at. Good day. Want to welcome everybody to the webinar this morning. I'm going to introduce myself, but before I do, can I get a sound check? Just type in a Y into the question box, make sure everybody can hear me. All right, very good. Thank you. So anyway, what I'll do to start with is I'll introduce myself. My name is Rob Guth. I'm one of the managing partners here at Trade ATS, and yeah, I happen to be Wade and Shane's dad. So anyway, I'm going to be introducing and kicking off the program this morning. And so just give you a little bit of a rundown of what's going to happen. So Shane's going to come in first, and he'll be talking about the volatility report. And then after that, Wade is going to go ahead and share some really cool stuff that we've got in store for you guys. So you're not going to want to miss that. And by the way, just as a friendly reminder, for those of you that are new on the program, we want to make sure that if you've got any kind of technical questions, please make sure you send those over to support@tradeats.com for any questions you might have. Now, for those of you that want to have a currency pair looked at, or some pair or something looked at by Wade and Shane and analyze it a little bit, make sure that you go ahead and type that into the question box, but make sure that you give us some multiples. So we have the currency pair, the time frame that you are looking at for entry, and then your supporting time frame. That's always helpful to move the program along. So with that in mind, what we'll do is we'll go ahead and we'll turn it over to Shane. Shane?
All right, perfect. Thank you, Dad. So yeah, for those of you that don't know, this is a family business. Anyways, so I'm going to go ahead and jump into the volatility report right now. We're not going to spend a crazy amount of time on this. For those of you that I get quite a few emails. Last night it got released a little bit longer, and I could tell that some people were waiting for it because it got released at about 8 o'clock our time, 8 p.m. at night. And the maybe 2 hours leading up to it, there are quite a few emails coming through asking where it was. But anyway, so the pairs that we got listed this week is pound yen, New Zealand franc, and euro NZD. I just talking kind of a broad overview, it was a little bit difficult to find pairs that were, I would say, worthy of ending up on the report. It was there was quite a few things that were in weekly boxes. So if for those of you that are trading on a little bit smaller time frames, I would encourage you to go back and whatever pair you're trading, go and take a look at some of the higher time frames, because I think you'll find if you're not quite getting the direction, it might end up being that your pair that you're watching is in a box on a higher time frame right now, because there was a lot of them, or a lot of them are just not quite set up or overextended or something along those lines. So I wanted to do something a little bit differently for this week. I wanted to start off with a pair that didn't quite make the cut, that could have, that technically looks like it should be on the volatility report, but didn't make the cut. So that would be CAD yen. I only wrote down, when I go through and do my my overview of all of the different pairs that can be on it, CAD yen was the only other one that I wrote down on my list. And yeah, so the reason it did not make the cut, a few weeks ago, Wade went over the master pattern, kind of looking at the broader view of it, where you can see that an expansion takes place, and then there's the whipsaw that comes out of that area. So we had that a few weeks ago that started, around March 10th back here. And then we broke out, and we've just been whipping back and forth, and we ended up forming a box, broke out, formed another box, and we can see that we're not really making any progress, just overall. So when I see something like this, until this breaks out pretty significantly from this overall range that it's set, we're really not interested in this. There's so many better options. So, like Wade always says, there's only a handful of things that we can actually control about our trading, the direction and when we get in. So that being said, you don't really want to be trading in a situation like this where it's just not really taking off, not going anywhere. As soon as it breaks out of a box, it goes right back into another one. Now let's go ahead and jump in. I went back and reviewed these two pairs. It's kind of funny, pound yen in it, talking about how if it doesn't really take off or doesn't really give you much, just kind of stay out of it for the moment. But Euro NZD and NZD franc definitely took off. Mostly Euro NZD. It pushed down about 100 pips since in the last 12 hours since the report was released. So we'll go ahead and take a look at that for just 1 second. I know a lot of you trade the 4 hour into the 15. Let's go ahead and just take a look at any entries in here. So we had this guy, we broke out of the 15-minute box up here near the high. And then it's been a fairly straightforward run to the short side. The first very clear entry, these are always a little bit trickier. When it pushes down, takes out a liquidity line, then we have a little rollover right here, the breath back. Those are always tricky to take. I see a lot of people jump into stuff like that, but really the entry that I'd be the most interested in is what happened over in here. So we can see that, you know, we're getting some wicks up out of these candle bodies that are kind of getting held up on some of the previous expansion lines. And then we form a new box and then go and whip through another expansion line, hold under it. Also don't take out a past liquidity line. And then from there, we just start pushing down. So those would be the real entries that you can feel confident about and also manage your risk to a pretty tight degree. Even if you got in, missed it, you know, a little bit, your risk is 8 pips plus spread. So that's the kind of stuff that you're really looking for. And then you can, you know, manage your lot size around a, you know, potentially like 10 pip spread or 10 pips of risk. All right, let's go ahead and take a look at New Zealand franc for just one moment, and then we'll wrap up the volatility report. So there was one thing that I wanted to go over with this, kind of a little bit of background info on how I picked the bias of the, you know, the overall direction. So in this one, I kind of hinted a little bit that we had a slightly higher probability to heading short. So why did I say that we had a slightly higher probability to head short, even though it ended up going long? Well, we can see that price, one, the two things I was looking at was one, this box, and then two, the reaction to the expansion line right here. You know, when the report was released, we were still floating pretty close to it. We were, you know, 15, 20 pips away from the expansion line. So this kind of plays into when do I trade when we hit an expansion line, when do I rip it, you know, as a reversal, and when do I trade with it in continuing the overall trend. So when do I trade and rip it the opposite direction? So that would be long. When am I expecting a bounce? And when am I expecting it to hit it, whip back and forth, and then continue pushing down? So I know that would that's one that probably comes up a little bit more. So in this situation, why did it end up going long? Let's look at that exact price level. So 5.820. So that would be back in here. So this general range in here, let's see if there were any clues on our entry time frame that might have helped us out in parsing out what direction it was going to be. The only thing that really stands out right here on at least the entry time frame, because a lot of times they play together or that they go hand in hand, would be this little rotation that we had right here. So we can see that this expansion line happened. We came down, broke through the low of the expansion, and then whip up, and then whip down, take out the low, and we also held above that. So that to me kind of tells a story of protecting buy orders, you know, where price whips down through it and doesn't quite push much further. So discourages buy orders, but also protects market maker interest in the orders that were placed inside of this contraction phase. So that would be one of the clues on the smaller time frame. And then as far as the longer time frame goes, it's always best to wait for the reaction. I know that's kind of a bit of a non-answer, but don't, if you see price coming up to an expansion line, especially on a larger time frame like this, it's a very high probability that it's going to kick back and forth there for just a second. When you see a reaction like this and it pushes down through and then comes back up and starts breathing, typically there is a good chance that it could just breathe and then continue pushing down to the short side. Something that you can do to kind of help yourself a little bit is find that expansion line. So again, that's 5822, and go ahead and add a horizontal line to your entry time frame, and you'll be pretty surprised with some of the reactions that you see on your entry time frame to that same price level. They really do roll over. All of the reactions do roll over into some of the smaller ones. I don't know if that's exact, but it's pretty close. But you'll see a lot of reactions on your smaller time frames when you're trying to parse out exactly how to handle a turn on a larger time frame. Let's go ahead and look at this on an hour real quick. Yeah, so right through here, pushed up through it and then started bouncing on it. Anyways, I think we'll probably leave it at that. Just a few little tips about dealing with some of these turns. So just to kind of bring it back around, you're going to be looking for a few clues on your entry time frame, because they all kind of roll into one another. You know that something's going to happen once it hits this expansion line. We don't know exactly what, but you just have to look at all of the clues together. So that could be little clues of it holding above expansion lines on your entry time frame, or it could be clues about stacking expansion lines right here, or it could also be clues that it is not taking out liquidity. So if it stayed above this liquidity, if you managed to get an entry down in here, that could have been an ultimate out as well using this liquidity line. But anyways, I'm going to be in the comments going through any questions that you guys have. So if you have any questions about something that I went through here, feel free to type it in, and I'll try to get to as many as I can. Anyways, that being said, I'm going to go ahead and hand it over to Wade, who has got some cool stuff to go over with you guys. And yeah, feel free to send over a pair or type in what you want us to take a look at.
All right, thanks Shane. Thanks for handling that. I appreciate everyone being on here. So as Shane mentioned, I got some cool things I want to share with you guys today. Hang on, let me just get my stuff set up here and we will get into it. Okay, can you guys just confirm that you can, number one, hear me, and then also you can see my screen. You just type a Y into the chat, it'll be fine. Thanks, Ian, appreciate it. All right, thanks, Randy. Good to see you on, Randy. Okay, so I think we're good. One thing I want to go through real quick. So I've been kind of jotting down some of your guys' questions from the feed, because I'm watching your guys' comments come in, and I want to address a few things here regarding. One is you guys brought up Euro NZD a couple of times, and Shane brought up the 4-hour and the 15. So I got that up for you guys right now, and wanted to just kind of go over, because there was a comment made that it says, okay, Shane was talking about the short rotation here, and the comment was, but there's no supporting expansion line to short. So you'd think like maybe you would have got a box in this neighborhood, and then you'd have that expansion to trade away from. And that's true when it comes to the basic strategy, which is the very first thing that we say here. Like if you've never traded this way, for those of you, I'm talking to most of you guys that are new here. If you've never traded this way, we give you that basic strategy to get your feet on the ground, just so you have something to kind of go off of. But eventually, the longer you spend time with this chart mapping system, you become creative in different ways with it. meaning you start understanding the patterns that it unmasks in the market, and you are able to take trades. For instance, we did a webinar, I think it was now 2 weeks ago, talking about the global view of the overall master pattern, the contraction, the expansion. So when you look at it from a more global view, you're able to take trades that may be against expansion on your higher time frame because you're seeing the global view unfold. And what I mean by that is, yes, there was not a specific expansion line at this point to support the short trade. You know, you have your grade A opportunity right here. You're pulling above, rotation right there. That's your leg into that down move. But without the expansion, how could you justify that? Because every trade, at the end of the day, you just got to weigh out what risk to reward, and you got to weigh out probabilities. So in this situation, you had an expand high, expand low, expand high, expand low, expand high. If you guys see it, just classic expansion. That's and remember, it's about looking at when it starts to unfold. You knew this when you had this expand high, expand low, and then we expanded high again. These highs are pointing back to this as a heavy point of origination. If you go back and look at that webinar 2 weeks ago, I went into this in depth. So you're starting to see, okay, I'm getting a widening of the market. This is a classic multi-leg expansion happening. It's proved it. We're not guessing here. That's what it is. And obviously it can break out, but you can start to see how you can start treating this as this is the central point here. The heaviest center of gravity in this entire sequence is right at this point of origination, which these expand high, expand lows are pointing back to. So as this happens, every time we broke through the low, this one we had another little leg down, but you see we deviated right back up through the center of that point of origination. Up here, we broke the high, and now we're deviating back and we're trying to get below. Eventually, it's going to stop breaking these highs and lows in this expansion pattern, and it's going to go into the trending phase. It's going to take off. But it's either going to have to hold above or below this point of origination. And when it starts to settle, then you can start treating it one way as well. But so going back to the original question is, how can you justify shorting into a situation like that? Well, if you're looking purely at the technicals, if you want to be robotic about it, well, you can't, because there's if you're going, I got to go to the basic strategy, I got to stay in that, which you can, that's fine. The basic strategy is your bread and butter, especially if you're new. But as you guys spend more time with us, if you see what I'm talking about, you can see you're putting it into this rotation into context with what's going on here. Then you may decide, you know what, I see that it held and I'm starting to see this aggressive push down. You know what, I may want to take that. It's up to you. You guys trade the way you want to trade. We're not here to tell you, when to trade and how. We're laying forth a way of looking at the markets, and it's up to you at that point. But that's a way, in my opinion, that you could justify taking that short trade. Same thing with taking a long off of here. Maybe you tried it right here and you tried it again right here. But what you're doing, the trading idea, because every trade starts from an idea, and then you're looking for clues that enforce that idea to take the trade. The idea is that this overall swing high, swing low, swing high, swing low, swing high, swing low is going to keep doing that. It's going to keep carrying that out. So then if you take a trade right here, you know that you're seeing this point of origin back here, that the trade idea would be, I'm going to trade the rotation and try to get up through these levels right here. And you say you have several expansions in that area, building up that area as a significant point. And same thing with this one. If you rip this short, you're basically trying to get from in here somewhere down in this area, and you're trying to just see you're just trying to buy a ticket on the train at that point. Now, what leverage you use, what money management is all your guys' business. We don't get into that. It's what you guys do. Like I said, we're just trying to unmask this pattern for you guys and lay it out there. You guys can interact with it as you see fit according to your strategy and the time frames that you trade. But that's how something like that could be justified. And that is the reason why the ATS assistant will send you a grade A trade in a situation like this. It'll send you a grade A opportunity. And for those of you that are new, if you go through the ATS assistant videos, it talks about it only looks at the candle color. It does not take into consideration whether you're above or below expansion on your higher time frame. Now, our next version will have a filter for that. just to make it easier, but I left it loose because I do have traders that have been with me for a long time. I'm talking, going on like 8 years. And they've been looking at this type of methodology. They've been doing this with me back when we were on FXCM. In fact, some of them are on the webinar right now, and they've been looking at this pattern a long time, and they're past the rigid strategy of looking at, am I being supported by an expansion line, or that's the basics of where to start, but they can start to see this stuff unfolding. So I left the ATS assistant loose because it'll send you a great opportunity, but before you just blindly just jump into the opportunity, you look at the context of the market. Now, for those of you that are new, you'll only want to take those grade A opportunities that are in line. You have a supporting expansion line, or the grade B opportunities. You want to take them in line with the basic strategy and maybe ignore the ones that are against the basic strategy because you don't have the experience yet. That's up to you, but that's the reason why I left it loose like that, because there's a filtering process, and also too, if I did have it heavily filtered, then you can miss a lot of these cool mean reversion trades that come back into the mean of the center of gravity of the master pattern. Even stuff like this, catching this rotation, a grade A inside here, just trying to take it back up to here. You wouldn't get those if I made it super rigid, and that's why that first version is pretty loose. Now, I know like some of you guys that load the ATS assistant and are new, you're like, oh man, this thing doesn't work. It's so confusing. But like I said, it's just supposed to be an assistant to alert you to a first counter trend liquidity pullback, but you need to put it in context with the market. And it's probably my fault for releasing it. I should have locked it, till people had 90 days experience at least, because some people do get into the program and they just load that up and think they're just going to follow the signals, and it just doesn't work that way. It's supposed to just be a filter for that criteria, just so we know, hey, there's a possibility of getting early into a big winner here, but you still need to put it in context of what the market is doing and then formulate your trading plan around that. So anyway, I wanted just to touch on that. So I see we got a flood of questions. I'm going to try to get into those here in a second. Now, my dad came on and Shane came on. They said, I got something cool to show you. And I do. It's not done yet, but it's getting very, very close. I think it's right here. All right. ATS version 3.0. So we finally got back after all this pandemic junk's going on and all that, and we're finally getting back into our workflow here, and so we're getting stuff done. And so I'm going to walk you through kind of where we're at. Now, this does have a few little bugs in it still that need to be changed, but I'm just going to show this off to you guys and let you know that. Sorry, phone's ringing. Actually, let me put that on vibrate, and I apologize for that, guys. Okay, so I just want to walk you guys through, basically what the new features are and just kind of show you what's going on here. So one thing you'll notice right here is that we got these two blue lines up here. And you think, well, okay, what are those? And that's the new money management feature that we have that is programmed in there. So in this, you're going to put the lot size that you want to trade. Let's say, this is just one standard lot right here. So like in euro dollar, it'd be like a $10 per pip position. And then this is the risk that you want to take. And right here, this is set at 0.5% of risk. So what this is going to do is it's going to look at your real-time account balance. And this is not your closed position. This would be your positions that are even in the money, contributing to your account value, I should say. It's going to look at that in real time. It's going to look at the lot size that you want to trade, and then what you're willing to risk. And it's going to show you where that risk is in real time, according to with the spread factored in and everything. So right here, this is one of the things that's broke, because I have it set on 0.5% and it's still showing 2%. So that we need to get that fixed still. But you can see that right now, if you want to trade one standard lot, which is $10 per pip in Euro USD, and you only want to risk 0.5% of your total account value, it'll look at that and it'll draw these lines for you and tell you this is where your stop needs to go to risk that, and it'll show you a dollar amount, you know, of what you'll be risking, you know, basically. Now this will fluctuate a little bit. It doesn't have an auto stop feature because that would have to be tied into an expert advisor. We may do that here in a little bit in another update. So you do have to set your stop manually to those levels. But what this does is that this will follow price, and you can set your risk and your lot size, and then you'll see how much maneuver room you have when you're fishing for an entry. You can compare these to where your recent levels of structure are, your last expansion levels, all that, and you can see, okay, look, I got to risk 1% or to risk, you know, 0.5%. You know, I got more than enough room to get into, you know, the expansion levels and the different significant levels to find out if I'm right in this trade or not. So, I see you guys' comments coming in here. So you guys are excited about this. I know it's just really cool. You know, so the idea with that is for you guys to get a little bit more real-time understanding of your money management, and understand, like, this is you know, what a lot of new traders do, you know, is they'll, you know, let's stick so this would be $100 a pip. Okay, so if you're trading $100 a pip and you're going to risk 1% of your account. Oops. Let me see, one. Okay, so that's $100 per pip. Let me see, it should. Hold on, I'm still getting used to this thing. Okay, so so that's $100 per pip, and you only want to risk 0.5%. You can see how tight these get, and that's going back to the whole pain and pleasure thing. If you guys are risking too much according to your account size, you're going to see, like, look, you got no room here. You got no room. So that's the tighter these are, the tighter you better be calling the turn. You're not giving yourself any room for creativity to explore the trade. So what question just came in? Will the indicator show you where to put your profit taking level if you're looking to stay at a 1 to 5 risk reward ratio? Here's the thing with that, is that because we're trading off the architecture of the market, you know, that what you want to be careful of is setting just an arbitrary take profit level, because you may be in the money. You may be in the money on a trade, and you're seeing that it's reacting to a level of structure in a way that's saying, okay, this trade may be over. But if you're just focusing on, oh, I'm trying to take 1 to 5 risk, and you're just letting it ride, well, then you stop paying attention to the clues of the market. So, you know, this is more of an entry tool and a know your risk before you get in, but you still have to have your trading plan intact to understand where you expect it to go. And so you have to have a kind of a profit, a zone that you're looking for, and work backwards from that. So since you showed with a little more zoom, I don't know how much more I could zoom in than that. Hopefully you guys can see it okay. But anyway, so that's kind of, you know, how that works. So let's put this back to 1.00. And then so if I change it back to a $10 per lot position, you see how wide it gets. Okay, now you got a lot of room to build a position if you want to. You got, you know, you're not worried about risking too much of your account on one trade, because it's, you know, this is, you know, you got enough room. So that's just to kind of give you guys that insight into, am I trying to trade too tight or not? Am I giving myself enough room? Especially, and you could adjust that with the situation, with the entry situation. If you want to trade heavy, you know, then you can tighten this up, and you're expecting to trade like the grade A opportunities. You want to be real tight with those and trade a bigger position. You can decide to do that, but you just need to adjust this to give yourself enough room and without risking, you know, too much of your account. But it just gives you that extra kind of ground and sky to work backwards from. So that's one feature that's going to be on this, and then you'll actually be able to turn this on and off if you want. If you don't want to see that or use it, you can go to the settings and turn it off. In here, we also just have some general information. This is kind of gonna replace the old dashboard indicator that's in there. That I made that years ago, and it's kind of got a little bit glitchy on different screens. So we're trying to replace that with this. So it shows you just your spread, so you won't have to run this spread indicator anymore if you don't want to. It'll show you the pip value. So whatever you put in here, this will adjust to show you the pip value in whatever currency or instrument you're trading. It's going to show you the margin requirement according to the leverage on your account and your broker. It'll show you any open positions that you have. It'll show you the current value of those positions on the pair that you're running it on, and it'll show you a session P&L that'll allow you to basically, like if you're trading on a daily basis, like London, New York, that'll reset. And you'll be able to, it'll start you at 0 basically on the start of a new daily candle. And that way you can kind of track where you're at dollar wise for the day. And then also you can set it for weekly and monthly. I think I got to check on that, make sure that that's done right. So, but anyway, it just gives you some kind of key performance indicators for what you're doing. But I think the coolest thing on this by far is the money management tool. So hope you guys will like that. Okay, so the next thing that's really cool is I told you guys we're going to have some new candle features, which I know some people have been begging for. Some of you guys just don't work good with Heikin-Ashi. I love Heikin-Ashi candles. I think they're the best out there for this kind of trading, but I know some of you guys are just, you've been looking at standard candles forever, so we do have that. So let me pull this over here. So this is the back end, the inputs here. And like I said, this is all probably going to change a little bit more. I got to organize it. Right now we have settings for everything, including, you know, the font size and the colors of the dashboard and all that. Where we're going to land on some default settings and get that all worked out. So right here, you got the first thing, choose candle type for chart. So right here, it says Heikin-Ashi candles. So I'm going to change that to standard candles. You click OK. Give it a second to load here. There it is. Now you can run it with standard candles and it'll hold. If you create a template out of it, it'll hold. It won't bug up like the old one because the other one wasn't designed to run with standard candles. This one is. So you guys be able to do that. You could change the colors. You're going to have full control over all the colors. So if you guys that don't want the green and red and you want to change all that, then you'll have the power to do that. So that's coming. Another cool thing is that we got a new hybrid candle in here, which is called Heikin-Ashi standard candles, which are basically standard candles, but they hold the Heikin-Ashi color. So if you guys want to see the bodies of the candles not smoothed, but you like the stability of the color, then you'll have that option. So it's a cool hybrid candle like that. Let me see if there's anything else in here that's worth talking about. That's pretty much it. So, and see, this is the session reset. So you have 1 day. Let me see. Yeah, we got 1 day, 1 week, and 1 month. So if you guys are like, you know, I do have a lot of people that just trade longer time frames. So they're trading like the daily into the monthly. So if you're trading on a monthly basis like that, then you can set the session P&L, the reset down here. You can set this to reset on a monthly basis. So that way you can see if you're up or down for the month, you know, and it's not more of a daily thing for you. So you can, you know, or the week too. But you guys can adjust that. You know, the week would be for more like position trading, like swing trading type stuff. And the day would be like if you're trading the 5 into the 4 hour, the 15 in the 4 hour, and you're just you're trying to be at cash, you know, at the end of the New York session, then the 1 day would probably work for you. But anyway, that's it. So
just wanted to bring up real quick, also with this, one of the best quality of life things is there's going to be no more, well, not the license key structure that we've had so far. Do you want to touch on that a little bit?
Yep, absolutely. I was just getting to that. Before I get into that, I got a question here. Is the expansion index a separate indicator? Yes, it is. And the expansion index, because the expansion index was built for the last version, I do need to do some brush up on that, but we have to have this done first. and then we have to retune the expansion index to integrate with this one because they work together. So that will be, I'm trying to release them both at the same time, but it's created a little bit extra work. Just because this has come anyway, they have to work together and the code has to be right in order for them to read the correct signals to work from each other. So, but yeah, you'll have the expansion index too that will be able to run under this. So you're going to have that full complete suite setup. Let's see here. And then Shane said, as far as a license key, right now you guys load the license key inside the user inputs. I'm still waiting for the final specifics on this, but we have a whole new cloud system that we've been working on to where you guys will actually be able to generate one license key for each of your accounts. We're still going to support 2 MetaTrader accounts per subscriber. And then you'll only have to enter in your license key one time into MetaTrader. And it may be on a separate indicator type file. So you'll load that, you'll load your license key into that. And then all of our indicators that come from Trade ATS will look at that license key from that file and they'll just work. And then so that it'll be a one-time deal, per account that you register. And that's it. You just put the indicators on the charts and it's done. So you're not going to have to update them. Nothing, no more of that stuff. So we're excited. I know a lot of you guys are excited about that. I know the license keys are kind of a pain, but they were, like I said, that whole system was never designed to scale as big as we've gotten. I started this thing for me and a few other people. I built this for me, and then I had a few people that wanted to use it, so I built the license key system for them. That came out of a different trading group that we had a long time ago. And that was it. And it was never supposed to have hundreds of people, getting on it all the time. So that's why it's become kind of a bottleneck to that. But this new system will totally get rid of that and it'll make it much more user friendly. Okay, let me go through some of your guys' questions here. Okay, one question. Hopefully I don't mess up your name. I apologize if I do. I think it's Gianelli. If I'm not mistaken, I've seen something like ATS. Sorry, I got my assistant going off there. Okay, I've seen something like ATS robot trading on a video somewhere. I think we did put a video on YouTube. The ATS assistant actually has a function to do auto trading. It'll actually get you into a trade on a grade A or a grade B signal and can be programmed. But I turned all that stuff off for the version to just keep it at alerts only. And the reason I did that, number one, for liability, our agreements, and everything are not, we don't want to put something out there, especially for new traders, that just gets them into a trade. But that's the video that you probably saw, was it executing automatically, putting into trades. I think that was running on the strategy tester in that video. But anyway, it does have the ability to do that. But if we ever do anything that's, I don't see how you could do a fully automated. Unless you're doing, there's not very many fully automated systems that work in every market condition. They have to constantly be updated. So, a semi-automated system, maybe, something we do here in the future. But I'm not just going to release that out to the public. We're not the type of organizations like, oh, here's a trading robot, and it's going to print you money. It's not the way that goes down. Believe me, I know. So if we did do a semi-automated system, it would have to have an advanced agreement for liability's sake, and it would have to have advanced trading. I'm not just going to let people go wild with that and hope it goes well. It's not going to happen. So, but anyway, it does have the function, but like I said, we just keep it to alerts. We want you guys, with those alerts, we want you guys to size up those opportunities according to your knowledge of the system and your knowledge of the market, and pick which ones you want to take risk on, and adjust your risk accordingly to the quality of the opportunity. And that's what it's there for. So the big question, how long until we get the update? I can see us getting this out to you probably within the next 2 to 3 weeks, I think is where we're at. Because we do have to create some new tutorials. The code should be done this week. But we have to put new tutorials. There's going to be a new process for the licensing system. So that's really, we couldn't make all those videos and do all that stuff until we had the final stuff in our hands. So right now it's basically just going to be a race to get that stuff done. Okay, let me keep going through some questions here. Question, you mentioned a filter from Vincent. Thanks, Vincent. You mentioned a filter. How would it work with the new version? Okay, I think you're talking about the ATS assistant. So we're playing with two different things. I already have the version 2 of the ATS assistant. And basically the filter would be if you want it to take into consideration above or below expansion, it'll do that. So it'll be more in line with the basic strategy. And then you can turn that off. And we're also playing with the idea of having also a filter of a supporting time frame. So like for instance, it'll look at if you're trading the 4 hour, the 15 into the 4 hour, and the 4 hours your supporting time frame, you'll also have a backup supporting time frame like the day, like you could do the daily, so or the weekly. So it'll only send you signals when the 4 hour and say the weekly are the same color, however you program it. So basically what you're trying to do is you're just trying to filter out more of a solid trend. Excuse me. So that's really the difference with the filters. We're just trying to plan on what's, I don't want to over filter, but I just, anyway, we're gonna have to see how that works. Honestly, I think the version that you guys have right now, the ATS Assistant version 1, with the more experience you get, I feel like that's the best version, honestly, because it gives you the most alerts in the best situations, but it does call for some filtering skills. Like you can't just follow the alerts and get in and hope it works out. You have to look at the context of the market as you get the alert, because you really can, find some really cool opportunities. So, my opinion is that version is almost, it's really good, but you just have to know how to look at it. But it's up to you guys. Okay, let me go through a few more questions here. Shane, if you want to add anything to what I've been saying, go ahead. I'm going to take a minute or two and just look. We got a lot of questions. I want to try to catch up here.
I just wanted to touch on the standard candles real quick, or just the change in the colors and getting away from the HA in general. I'm curious just to hear everybody's thoughts just on, it. Now that you're going to be able to change the candles around, I'm just curious to see some of the comments about which one some of you guys are planning on using. So if you could type that in, just are you going to use the standard candles, maybe play around and try the HA standard candles, or stick with the HA? And if you hadn't used HA up until this point, have you been able to get a little bit more comfortable with them and see, some of their benefit?
So while those comments are coming in, I'll answer a quick question I see here. Question is, can the dashboard be moved around the screen? And at this point, it's at a fixed position, which would be in the bottom left, which is normally the least crowded. If you're running other indicators, we always say just stick to this one, but there's other things that people run, and the bottom left corner is the most free space on the chart and works with our layout. So right now it'll be fixed to the bottom left. You will be able to remove the dashboard though. So you don't have redundant information. So if you're running like 2 or 3 time frames side by side, you're not gonna have to look at a dashboard on each one. So you'll be able to just have the dashboard, say on your entry time frame, where you're most interested in your money management and all that stuff, and you can have it right there. But that you can keep the other 2 charts or 1 chart clean, so it'll have that functionality as well. Another question you guys asked is what's the percentages right here in the bottom left of the this is just a countdown timer and just tells you what percentage of the current candles left. So 85%, 84%. So And then this is just you got 4 minutes and 10 seconds left on a 5-minute candle. So that's it. It's real simple. So Shane, you want to jump back into your question there? I see you got a bunch of responses coming in.
It looks like it looks like quite a few people actually are going to stick with the standard HA, but I think that you'll find that it's pretty interesting to see, you know, sometimes how the candles close in relationship to some of the liquidity lines, or especially expansion lines. You'll see interesting things with wicks going through expansion lines. It's pretty telling, I guess would be the word for it. But yeah, I didn't use HA quite as much before either, and I found that they actually simplify things quite a bit, you know, especially like when you're looking for a pullback inside of a push. They can really help with, you know, trying to get into a trade that's kind of already running in a sense. But yeah, it looks like quite a few people are going to be sticking. A few people are interested in the hybrid candles. So yeah, that's all good stuff.
Yeah, I'm sure you guys are going to be playing around with the functions and everything. So it looks like overwhelmingly people like the HA candles. And the HA candles, the reason why I've been using those things for so many years, so I'm really used to them. I think they're you know, the standard candles, like what ends up happening is, like, if you miss a perfect entry or you feel like the HA candles lag sometimes, and you're like, oh man, if I was looking at standard candles, I would have caught that turn. And okay, that may be, you know, correct in some circumstances, but here's the thing: is that when you're weighing out good versus bad qualities of a indicator, the standard candles overall, yeah, they will get you into a turn a little quicker, you know, every once in a while, but the trying to actually stay in a big run with a standard candle is much more difficult, just because of all the noise and the constant color changes and everything. It could be much more difficult. So if you're putting, you know, good against bad, I feel like Heikin-Ashi candles, although they do have a slight lag at turns, what they give you back in keeping you in a trend, and especially on your higher time frame, keeping you in that directional bias, I feel like far outweighs the benefits of being a few pips earlier to an entry with a standard candle. So it's just kind of process of elimination, good versus bad. That's kind of why I always, you know, switch back. And I've been frustrated too with Heikin-Ashi candles. I feel you guys, you know, when it's like, oh man, I was late to that, or I got in a little late because the candle changed color a little late, or, you know, whatever. There's situations, but overall, you know, you can't really beat they have just the perfect amount of sensitivity while maintaining direction stability. And so that's why, you know, they're good. I don't know who invented Heikin-Ashi candles, but there was a good invention. So
And just add one thing to that. Sometimes the pips that you lose on the entry are pips that you gain when they help you stay in the trade a little bit longer. Just give you a little bit more confidence in the direction.
yeah, absolutely. So let me see, we got some. So okay, so I had a question: what are the benefits of HA versus standard? Hopefully I just kind of answered that. Question: are the expansion index and the new dashboard going to be released together? I'm hoping. Worst case scenario, we're going to get this, because this is kind of the base framework of ATS. Everything goes off of boxes, expansion lines, and liquidity lines. Those three components, and then we, you know, build off of those fundamental grounding features. So I'm hoping that we'll have it done, but I don't want to drag this out anymore. I know you guys have been waiting. We've been trying to get this done for a while. I think it's been like 6 months, honestly. So I just want to get it out to you guys and get you guys the update and start moving forward on it. So we'll have to see. But if we can get it together, I'm going to give you guys everything we can, obviously, because I want you guys to have the best stuff. Another question I think I saw there, it says, does this work with limit orders? I'm not totally sure what you were referring to. but I mean, limit orders, they're going to work the same wherever you place them. And buy stops and sell stops are going to be, it's the same. I mean, it's not going to, hinder those from working. So however you want to use those in the way you formulate your strategy and approach the market, then that would be something you can do. So, okay. All right. Well, I think we've answered most of the questions regarding the new indicator. Let's see where we're at. We got a few minutes, so I'm going to take a look at a couple of markets and just do some top-down analysis real quick, and then we'll probably wrap it up. So let me move this out of the way. Just go back to our original charts here for the moment, and we'll take a look at Euro USD first here. And we're going to start. Let's see how the monthly's doing. So things still wanting to dive down. You can see on the monthly that we're still struggling with this level right here. And so it feels like, if we were going to reverse heavy, you got to ask yourself the question, like we pushed up right here, and why are we back down here? This feels like aggressive enough that it should have been enough of a catalyst to start taking us back up here. So that makes me feel like fundamentally the euro against the dollar, this pair is, I don't know for sure, but we're at that turning point, and I feel this sense of that makes me feel like we're headed for the low down here at least on a monthly time scale. And if we get through there, we're probably heading down to snap this low right here. If you look at for the master pattern, the point of origination, where is that start? Where's the last one? It's going to be, right here. So swing low, swing high. Now we're going back towards a swing low. So right here is kind of that sensitive point. So between these two, you can see right here at that level, it's still holding below. So that may have been this spike right here is reacting between those two levels right there. But either way, this is your most recent one right here that you're working with. So on a monthly time scale, that candle's still red, benefit of the Heikin-Ashi candle. I would, if you're trading the daily into the monthly, my directional bias on that would definitely be short if you're looking for those longer term trades. Let's take a look at the daily over here. See how it matches up. Yeah, pretty much. Okay, so you're holding this spike up right here on the daily. We took out liquidity up here, mean reversal off of that. So that was that right there. Now, what are the clues? Came up, held average price right here. So we're not making progress through that key level. Okay, so now what? Came up, broke this. This is kind of your classic, entry opportunity. You're above expansion. Monthly is still red. Rotate right off liquidity right there. So possibility to get in, as you come down through this turn. Again, but if you're trading the daily and the monthly, this is not something you're looking for 20 pips out of. If you're going to take these kinds of trades because the risk is greater, on that you got to be okay with going down 50, maybe 100 pips, trying to find these types of opportunities, but you also need to be going in for 100, 200 pips at a time. Remember that the trade is the monthly. So this is just a way to leg into the monthly trade, but you could potentially, because you're waiting for the monthly to get the full realization of this type of opportunity, this monthly really needs to be down below this low. That's a push. You want to break the active low or the active high of the trend. And then at that level, then you can start to say, to see, am I going to take profits, and that's a significant enough move at that point to justify the risk of getting into this kind of long-term opportunity. So anyway, that's what I see right there. We kind of had it off the rotation, but if you're looking at that, right now, maybe a little too late. I mean, if you're going to jump in, you can, but you're already through here, through the average price. So if you're jumping in short, I wouldn't let it go against you much past like right here. It really just needs to take off. If it gets back up here, you could get another leg up back through this top and then another rotation and get a better entry up here. No sense in riding that negative all the way back. So you want to cut that loss because that is the framework right there between those two levels. So let's take a look at the daily. And then we'll take a look at the 1 hour. Okay, so the daily is now starting to get in the zone of we're below average price. The trend's starting to form. So again, if the whole daily trade carries out in line with the monthly, that's going to translate down to the lower time frames. And then, you got your situation. This looks like it was fast right here. So we'll see how that goes. One thing I see right here too, just glancing over the chart, is I see the overall swing high, swing low, even to the point of this box back here. Swing high, swing low, broke the bottom, swing high, swing low. You see we just broke that, and it left a liquidity line right there as well. We're getting that reaction. So, the point of origination out of this is basically this box level right here, and these expansion levels put together. And you can see we had wicks up through those levels and it didn't hold. So that can show you that price is starting to settle, which may be a reason why you'd want to get more aggressive on a turn off of that. If you're trading like the 5 minute into the 1 hour, you see the 1 hour holding that right there, then basically you're looking to aggressively snap this low right here and go into a down move. But again, this is just scenarios. Again, just my opinion, but really in order for this daily trade to take off, if you're trading the daily, if you're looking for the entry on the daily in line with the monthly, you can look at the framework of the 1 hour and understand you're at an expand low point. So in order for this to fulfill, if you're looking to jump into the daily and trade that into the monthly, if you really want to get down to business on it, you can look at this overall expand high, expand low, expand high, expand low, and you can see that you're in that master pattern range still. So if this is going to work out, you're pretty much not going to want to go much above these levels. And that's congruent with what I was just saying back here. These are probably about the same price. So, again, it has to break out of this expand high, expand low master pattern type range and get below this low and start making progress, down through these liquidity line levels. So if you're trying to short the daily, I'd be cutting it tight right there. Otherwise, if it does rotate and come back up, well, then you're probably going to complete the next expand high on this range. Expand high, expand low, expand high, expand low, expand high, back past this top right here. So you guys can see that. So we got a question that came through from Gianelli. Did you mention 2 weeks ago the possibility to recognize the point of origin more easily? Yes, if you weren't on that webinar or you haven't watched it, go back. There was a whole PowerPoint presentation on this, what I'm talking about. And I'm getting ready to record it and put it on YouTube as well. But, usually you guys get access to any of that new content way before anyone else does. So, but it'll go on YouTube as well here soon. And, but you guys can go check it out. And I talk about that whole concept because I'm trying to start talk about that stuff more because I want you guys, the ATS system is not about a rigid system, that being a rigid set of rules. I know that people they just want to follow some plug and play system and say, okay, I can set my stop here and my risk to reward is this, and I just wait for these 2 lines to cross and then I buy, or I wait for them to cross and I sell. And this means this and that means that. That is nice, and we do need some different pattern type things to look at so we can recognize what's happening. But ATS is really about being creative and giving you it's a map. It's a new Fibonacci. You think about how they've been trading a while. How do you guys use a Fibonacci? You look at the 50% retracements, you look at 100%, you got the extensions, and you get up to those levels, and then what do? You get up to those levels, and then you look at how is the market reacting? What's it doing? What clues is it showing? Should I short it at the 50% retracement? Now, I think Fibonacci is, this is obviously much, much tighter of a methodology and sensitive price levels, but that's really how this is designed to be looked at. This is not some guru trading system. It will never be. I'm not going to ever do that. This is a new form of technical analysis, and it's designed to be a stable platform for you guys to be creative on. That's what it is. I'm trying to be, this is the new Fibonacci, So and I have some traders on here that send me trades and send me insights. Especially we have some really awesome people in the forum, guys that have been trading 30 plus years on this, and they're finding new interesting ways to look at the market through this lens. That's what this is about. It's a movement in that way. It's not a package trading system. You guys have to understand, especially you guys that are new, the markets change cycles, they change swings. We go through economic downfalls, we go through good economic times. There's change, and you have to be able to adapt. So if you're looking for a one set it and forget it trading system, you know, there may be one that is net positive, you know, through all sorts of markets, but the discipline it takes to follow something like that is very, very difficult. You do have to have discipline, but you have to maintain your creativity to be flexible with the market. And at the end of the day, it's risk to reward. So that's what this is designed to do, is to give you guys stable framework so that you understand these are the decision points. Just like someone would use Fibonacci, if they're trading off of a 50% retracement, you know, you're going to go so high or low between, you know, where you're going to confirm if this trade is okay or not. That's what this is designed to be, a similar thought process to that. So like we do give you guys a basic strategy, because we do have people that are brand new to trading. They don't know what's what yet, and they have to have some place to get their feet on the ground. But at the end of the day, it's about your guys' creativity and understanding the decision points. So, you know, that's really what we're trying to have this evolve to. And, you know, we love to learn new stuff from you guys. You know, it's I can't tell you, it's really awesome to have the hundreds and hundreds of eyes we have looking at this and getting their insights, and the community around it is really, really cool. Okay, so let me see if I'm going to pick out a couple more questions here. Let me finish my analysis. I apologize, I'm getting off topic here. Okay, so we got hour here. Let's go to the 5 minute and just see what's going on for the moment. And granted, remember, this is now, you're getting on these lower time frames. We're getting out of session at this point, so wouldn't recommend getting too heavy on trading right at the moment. Overall, this is kind of a difficult trading through the New York session. You know, right now you want to stay short. You know, if this continues green, you're headed for another box right here. I wouldn't be trading this much right now at all. I think it's pretty much over for the morning. If you are going to trade it, I'd wait till an aggressive move short. But this is something I'd definitely look at the remainder of the week. I think the euro is going to open up and have some really good opportunities, especially because the daily is so close to the expansion level. That's a really big volatility point. And if it's there on the daily, that is going to translate into multiple days of movement, you know, with decent trends. So I'd look at Euro USD for the rest of this week and see what happens. Okay, we got one we'll look at Aussie Franc. If I could find it here. There it is. Wow, look at that. That thing's been trending heavy. See, that's why I like Heikin-Ashi candles. I know that doesn't happen all the time, but man, that's why you want a directional bias. So important. Marry one side of the market and just stick to that side of the market, man. Okay, so let's take a look. I'm not going to go that far back. I'm just going to go on the daily, because I know a lot of you guys here are trading on a daily basis. So I'm going to leave the monthly alone on this one. Okay, on the daily, let's see what happens. You know, actually, I am going to look at the monthly on this, because I want to see. Okay, so we have that.
Your 15 is, or your 5 isn't changed over yet.
Oh. There it is. Thanks. Okay, so the monthly, we got a new green candle. Okay, so that's interesting. That's starting to show like, okay, we definitely could be long. Of course, it just changed. I could easily change back to red still. But we are long for the moment on that. So let's keep that in perspective here. And we're starting to go long again off of this expansion level. We see we had that reaction point. That's how sensitive those are and how they represent those decision points. We're reacting, going long off that. We're starting to get green on that. So at this point, let's just put it this way. If I wouldn't feel super comfortable shorting this, because especially because the monthly's starting to turn up long, the daily's starting to go long. I wouldn't feel, if you're going to short it, I'd wait till you start getting some more movement if you're trading the daily into the monthly. Now on a daily into the hour, let's see here. Let's see if we could spot what's going on here. Yeah, man, that was a big aggressive drop back. So you're just kind of in the middle of this overall movement. And this is, you can look back and see even these points of origination right here. We had expand low, expand high, and we kept going, expanded high up to there and expanded low. So if you're looking at these, you can see, okay, we can start to see that, you know, this was a significant point with these highs and lows pointing back to that, but this is getting pretty macro at this point. It's getting pretty big. I would wait till you get something smaller to work with. This doesn't have a whole lot of framework to work with at the moment. So I would wait for the 1 hour to get some more boxes and some more expansion lines. It just looks extended in all directions. Extended on the short side, it's extended on the long side. I would wait for this to set up. You can see it's starting to settle kind of at the 50% mark of this move. So, you know, I think this party is a little bit dated to look at, and I would wait for some more framework. You really want to get things that are tighter to an expansion level, because that's where you're going to expand from. So, you know, it's interesting, but you know, I think the chances of this going into a sideways market and getting into a situation where you could get really beat up are getting higher and higher at this point. So I would wait till that starts to take place, and then when you see that is taking place, then start to look at, okay, where are we at? Where's the new swing high, swing low points? Look at that new expansion range and start getting in on that. So, and that's kind of going to translate into the daily. So I'm not going to go into the lower time frames today. This is already ran, so I'm sure you had plenty of opportunity on the 5 minute going long. You're above expansion. Well, you know, let me look at it since I'm talking about it. Yeah, so it's pretty classic. You know, you're long, you're above expansion, basic strategy. You know, below expansion, working back up through the expansion levels, long, nothing but longs all through here. So, you know, pretty classic right there. Okay, we'll look at, we got one for USD CAD, so we'll take a look. Hopefully I pronounced your name right. I apologize, but I think it's Frida. Can you let me know what time frames you're looking at? I'll pull over the time frames I think are relevant, but let me know just so I can take a look at those. Okay, so it's like you're in a long position. Let me see how that's getting affected here. Okay, so the only way you could justify a long position on this, looking at the hour into the daily, starting from this time, okay, 15-minute, 4 hours. So let me talk about this one for a minute. Right here, you're still just kind of going back and forth through the center of gravity. So if you're going to take a long position on this, you would have had to find some leg in, which looks like it was probably pretty difficult to get into down here and work up, because basically what the only opportunity or idea I see was a mean reversion. You broke the low down here, you barely snapped it, and you're just trying to take a trade back up to the expansion level, or possibly through, depending on what the monthly looks like. Let me look at that real quick. So monthly's long. We came through liquidity, but you're still above. So monthly still has a potential to keep pushing and get through this active high. Still potential there. And it's still clearly green. So going back to the daily, what you're doing, if you're looking, this is just a standard setup for the daily into the monthly trade. You're below expansion, trying to work back up through expansion. So you get above, that doesn't hold, cover on that opportunity. You'd re-enter, see if you'd be in the money a little bit on the turn, maybe at break even if you got in late, but you're trying to work to get through this if you're trading the daily into the monthly. Now, if you're long, let's take a look at the 4 hour into the 15. I think that's what you're in. Okay, so long on the 4 hour. Well, I'm not sure which candle you got in on here, but So the only opportunity I see here, we do, if you're looking at the overall market framework, looking for the last expand high, expand low, we had an expand high, expand low. We broke that expand high, so we could see that this is a heavy point of origination right here in recent terms. Unless you had a green candle coming up on the 4 hour, if you place that and then that started to hold and then you saw a counter trend pullback on the 15, that would have been a situation to go long. But in this situation right here, if you're short or if you're long, this looking at the market in the context, we broke the expand high point up here, came off that liquidity level point right here. And now you're starting you had the chance to get a reversal and now we're getting this aggressive movement down. I don't know for sure, and I'm not telling you what to do. You have to just work from the sensitive points and take into consideration risk to reward. If you're wrong, it always starts from there. But the only trading idea I see here, if you're trying to short into this, would be shorting off of these levels rather than going long. I don't see enough confirmation and settling to take a long trade, so I'm not sure what was happening when you decided to do that. But I see a much higher probability of going back down to this level right here, and then possibly going back through here. Now, you still have to find your entry into that. So the last, decent entry I see was probably the rotation off here. We came up, we held structure at this level right here. 4 hours still going short, clearly, and shorting it right here. And the idea is that your overall trade, remember you're trading the 4 hour, you're just trying to get in over here, is that the fulfillment of the 4 hour would head down to this area right here is the only thing I see. I don't see any long trade in here, honestly. I'm sorry to say that. I know hindsight is 20/20, but looking at just generally what's going on over here, you could have taken a long trade maybe on a spike up or a situation like this, but even the framework is stacking short. You're getting these liquidity lines and the structure is all just stacking in a downward direction, and it's respecting it in situations like that. So if you're in a long, let's say you did go long and you said, okay, I'm going to go long. I think I'm going to catch the turn on the 4 hour. And then you get a situation where, let's say you get into the money and then it heavily respects a level of structure at an expansion line. That's a good reason to be like, oh, nope, forget it. Just take the break even, because the clues are not in your favor at this point. Now, if you want to wing it and just let it go for it, and then that's fine. It's your guys' choices of what you guys want to do. But this is in my opinion, the clues in this situation are, I think there's a higher probability we're going short at this point. And the risk management would be according to these levels of structure. Right now, I don't think there's a great place to enter. I mean, you're at this, so the next place you'd want to enter if you want to catch it would be if you got an aggressive push down through this expansion level. You get down there and then you can monitor your risk off this expansion level, because the facts are, if this is going to push, it's eventually going to respect that level and hold and keep getting through these liquidity lines and then down into these neighborhoods down here would be your general profit targets. But other than that, the strongest position I see in the recent history would be on this rotation right here. That's the strongest position. You'd be in the money on that for a short. But yeah, I can't justify a long on this one. Let's see here. Okay, so I'm gonna go through from JH here. USD CAD on 4 hour. Let me take a look at that. So JH on the 4 hour, you say we're long even though we have a stream of red candles, but on Aussie Franc, I'm trying to understand the question. I'm not saying that if I came across that I think that you're long at this moment on 4 hour USD CAD. I'm not. I'm definitely saying that the outlook, my opinion, again, disclaimer, you guys make your own decisions. My opinion is you're short. if you're looking for an idea. The only idea I see here is the fact that we rotated off the swing high, and the stream of red candles is because it's trying to fulfill attacking, going through this point of origin. We're starting to hold. We had this indecision at that level. We're holding below. The trading idea, all I see right here is short, coming back to this level as an initial profit target. And if you get really aggressive movement, heading down for this swing low. See it? Swing high, swing low, swing high. Now we're going towards that swing low point. So yeah, I'm not saying long at all on this. So, and I'm not sure, I forgot what I said on Aussie Frank, but like I said, this is a mean reversion trade. This is not in line with the basic strategy. I'm talking about market framework here. I'm not talking about, are we above or below expansion, the most recent expansion. I'm not talking about that here. This isn't just an idea based purely off the framework. So an Aussie Frank monthly, I'll check that out for you again here. So, and then we'll probably wrap it up after this here. Why can't I see it? Sorry guys, I live next to a nature preserve and my allergies have been going crazy. So my eyes are all watery and I got all that stuff. Usually happens to me every time this year. Okay, there it is. Sorry about that, guys. Okay, so the monthly, that you're below expansion. This is a significant time frame. It's starting to turn green right here, but I don't think there's a great trade on this pair at all. I think there's been a big fat party, a lot of volatility that came in. Personally, I would sit this one out for a while. That's just my opinion.
Hey, wait, could we take a look at Aussie New Zealand?
Yeah. Let me see here. There it is. Okay. Man, that monthly is pretty dirty. So that gives you some idea what to expect on a monthly basis. So let's, I think you guys are probably trading 4 hour into 15, so I'll just do that on here. Okay, so again, we've already deviated away from this expansion range box. Let me look at the weekly, just so I want to try to find some context of this area, because I do see the master pattern playing out here. If you guys see it, we'll touch on that in a second. Wow, look at that weekly. See that? You see that happening for a few weeks in a row? Go trade something else, because this equals death. You want to see a clean market. But anyway, that's besides the point of what's going on here. Okay, so strong reaction point off of there. Where are we at? Do we see any master pattern cycles here? Yeah, swing low, swing high, swing low. So right here between these two expansion levels, what's going to happen if we start rotating off of that? We're probably headed for a short market on the weekly time frame. So if you look at that in that context, we got to hold above or below this point of origin, which what's pointing back to that. Again, what makes that significant is the swing high, swing low points. They're all pointing. This one we didn't know anything when it broke out here. We didn't know much here, but we did get that swing low, swing high. That started the framework. The fact that this failed right here and we started coming back through, now we know, okay, that we're getting, it's already confirmed. We got the swing low, we got the swing high, swing low. Like we came down here, it didn't break the swing low point, but boom, stop takes at that swing low point, reversal. But again, this is the main decision point in this area on the weekly. It's defined and we're not guessing there. That's what it is. So let's go back to the 4 hour. Okay, so 4 hour basic strategy. We were long right here. You got one red candle. We're getting out of session right now, so I would say probably no trade. And coming into this turn on the 4 hour, we start to see this red. So your last opportunity to trade to catch another run up on the 4 hour would be when we were under expansion right here. We see it kind of just went sideways and then popped up and we held this level of structure. That's your clue right there that you got to be careful. When you get a turn off that level of structure, you may be headed for a red candle on your supporting time frame, like what's happening right now. So would you be going long right here? You can go long, but looking at the context of the overall market and the fact that we're getting out of session, which means the market may be going flat, you got to take that in consideration. Is this the greatest opportunity to go long? Not. I don't think there's enough good things, in your favor. Just my opinion. Yeah, really the best coming out of this rotation right here was this one right here, that grade A opportunity out of the box, come back up, held structure right here, and that legged you into the trade on the 4. But this is dirty. This is very difficult to stay in a market like this. So, if you got a few pip point, you're definitely only long at that situation, but difficult market to trade. Okay, we got a question. Do you guys provide one-on-one coaching just for an hour or two? So the question is, do we provide one-on-one coaching? We're working on something like that. Honestly, guys, I'm not one to be like, oh, have a bunch of big like upsells, like, oh, you could do this, and if you want to pay for this coaching and this advanced, like, honestly, I just try to give you guys the best of what we've come up with and do that. I know that some of you guys want some one-on-one coaching time. And I did used to do that when the program first started really taking off. I gave a 30-minute consultation to everybody that came in just to make sure that they understood what it is they were getting into, and had the right expectations was mostly it. But our program got so popular, I just couldn't possibly do it anymore. So what I try to do is I just try to put out enough stuff in these webinars where you guys don't need it. I want to give you guys enough, valuable insight for you guys to get started with that you just take off. But I do know that there is a demand for coaching. And again, that's one of those things that just takes a lot of bandwidth to fulfill, and I don't like to be on the phone all day either. So, but I probably will open up something for that for those of you guys that absolutely just want it. I don't know what it'll cost or anything, but like I said, my goal is to not do that. My goal is to give you guys the best. So, I don't want Forex to be expensive for you guys. When we first got into trading years and years ago, I was the idiot that went and bought the $5,000 course. I was the idiot that invested in the robot, and did all that stuff. I've spent so many hours and money and stuff testing, going down every rabbit hole. I don't want that for you guys. That's why we make it easy, to get into the program. We can sell this for a lot more money. But I don't want to be like that. It's $150. If you don't see it, if it doesn't work for you, it's okay. No problem. We only want people that understand it and see the value in the platform. And if you don't, that way you're not out $5,000 for some trading system when trading may not be for your personality in general. And it shouldn't cost you $5,000 or $10,000 to figure that out. It could be devastating to some people. So we really don't, we want to be the anti trading industry that most people take and want to make it easy and give valuable stuff. So anyway, I wanted, we may do something like that. But again, like I said, my goal is to keep Forex as least expensive as a learning curve for you and create value and have you guys be subscribers for a long time. That's why it's a bite-sized approach cost-wise. But we'll see how it goes here.
Hey, Wade, jumping back into kind of what you're talking about with getting into a trade right here. So you mentioned that the first clue of, potentially getting out of a long trade was in it when it held structure on the 15-minute at that. It's actually the highest expansion we have on the 15-minute. So it held off that and rotated to the short side. You'd probably, instead of just kind of jumping into this at any other point, you really want to see it hold on another expansion line or liquidity line to the low side just for a little bit of extra confirmation to see that it's actually going to turn back up long. Because when you get into a situation like this and it's not reacting to one of the levels, then you end up jumping in every time the candle turns green, and then it, you know, rolls against you again and keeps on pushing. So probably look for a similar clue that told you to get out of a long trade to get back into a long trade. So it reacting to one of the lines before it goes up, especially with it already having pushed so far away from the initial expansion line.
Going back, I see some more questions. Let me see here. So, and I know we're going a little bit over time, but I want to try to, I know we got a lot of new people on here, so I'm trying to set things straight, because I really want you guys to be off to a good start and have the right expectations in Forex. You know, this could be a very costly money pit if you don't approach it the right way. I know better than anybody. So, you know, definitely want to make sure that you guys have sound knowledge and you have a sound platform to work from. So going back to, we have a question from Michelle here. It says, would love coaching, but it doesn't have to be done by you. We could train some other people. That is something that we're thinking of, because we do have some really talented traders on board. You know, mostly the thing that I think about is I really don't want the message convoluted. You know, we want to keep it simple and straightforward and keep it the same. So, you know, I'm really interested in having continuity across any kind of content that goes out, because I don't want anybody confused about what it is that we do and how we do it. But yeah, that is one thing that I'm thinking about. We may eventually start reaching out to some of you guys, especially some of you guys that have shown great progress and are active in the forums. We have some really awesome people in the forums, and I'll take a minute. You guys know who you are. We really appreciate your guys' interaction. Really awesome insights. There's guys that jump in there, experienced guys too, taking their time to jump in there and help new people out and give them awesome insights. And they maintain the continuity of the program and talk about, you know, stick to the directional bias and things that are grounding for new traders. Man, you guys are awesome. I really appreciate that you guys do that. Anyway, yeah, we are going to get to the point here. Once we get through the software update and doing that, we want to start reaching out to some of you guys, possibly for some interviews on your experiences and kind of get more perspective than always just listening to me and Shane. You know, I want to start reaching out and getting some more participation from you guys, and possibly talk with some of you guys about maybe helping with some mentoring and doing some things as we expand, that we can, you know, offer more help that way. So, but anyway, it's, you know, this is all stuff to come. First and foremost, we're a software company. We're trying to push the, you know, the ATS, you know, agenda, I guess, for lack of a better term, to push a new form of technical analysis to those that see the value in it, and that's kind of where this all starts. But you know, we do know you guys need as much information and help getting started, especially. So we're always thinking about those things. So
There's one thing I wanted to throw out there as well. A lot of you actually do this quite a bit, but sending over screenshots to support at Trade ATS. You know, we've done coaching calls in the past, like even, you know, just in far back in the past. And we find that, you know, a one-time call, it can be nice and it can be, you know, get you fired up a little bit, but it's a consistency of sending over screenshots and analyzing your trades and just that consistency that's really going to pay off over the long term, over a one-time coaching call. Sometimes it doesn't, you know, it feels good in the moment, but it might not offer the long-term benefits that, you know, you'd be looking for. And yeah, so just if you haven't done it, I'd really encourage you, just shoot over a screenshot, support at Trade ATS. We both look at those, and you know, sometimes we take a second to respond to them, but you know, we'll try and type out like sometimes even up to a few paragraphs just on a simple question if we think that we can, you know, give you more value to what you're asking. So, you know, I'd really encourage you, if you haven't done that, send over a screenshot to support at Trade ATS and try to include, you know, some of your own thoughts about what, you know, why you took the trade or what the market is, and trying to include a little bit of thoughts of something that we can work with on it. And we can really, I think you'll find that, you know, we could help direct you in the right direction, or even clear up misunderstandings if you're new to the program and trading methodology in general.
Yeah. And one thing I want to mention too with that, I know that everybody that comes into Forex wants trading signals. They're like, why can't I just have a program where they just tell me where to get in and where to get out and all that? And I'm going to tell you the simple answer to that is that the only way to be sustainable is to make your own decisions. Because if you think you're going to follow someone's trading and just profit with them, the minute you don't have access or an immediate time, an immediate line of communication to that person, you don't understand. They may change, there's trades I take where I'm like, this is a great trade. And literally like 30 minutes later, I see a clue. I'm like, forget it, I'm done. So in order to follow the real-time thought process it takes, like it's almost impossible to effectively copy someone. I mean, unless they're willing to let you tag along with them 24 hours a day. It's not going to happen. So the only way to have true consistency is to understand your own thought process and come up with your own reasons of how you're going to manage your trade. That's the only way you could do it day in and day out, year in, year out. And also too, there's a huge liability with telling, get in here, get out here, that we're not going to take. We're not licensed, financial advisors. We're a software company first and foremost. So, when we give you guys, trading advice or ideas, these are just ideas. Where there's no way we can say you got to get in here and you got to get out here and you got to do this. We may just give you some generalized things, even in the screenshots that you sell or that you send over. We'll give you some generalized thoughts with that, but understand on our end, we don't carry those financial advisor licenses that cover you liability wise to be able to, to give exact financial advice, because this is considered financial advice. All we can do is talk about a theoretical methodology legally. And that's where we're going to stick to, and we leave the money management and all that stuff up to you guys. There's a fine legal line there that has to be obeyed. And like I said, you guys need to take responsibility for what you do at the end of the day in order for Forex to work out for you. And that's what we're committed to do, is showing you guys a stable way to engage with it that's as least expensive as possible. Overall, between what you're going to lose in education and learning and all that, and to get you on a good path. And like I said, those of you guys that see the value in it will stick, is what we're hoping. And if it doesn't work out for you, then you can move on to something else. But that's kind of the model that we're approaching, and that's what we're going to stick to. So, all right, guys, I think we're going to call it at that. I really appreciate all the questions. I was excited to show you guys that new update. I know that you guys are going to love that. I think it's going to be really cool. And we do have some other cool projects planned that we're going to come out with above and beyond what, this stuff. Everything we're never going to change the fundamental methodology, meaning the boxes, expansion levels, and liquidity lines and things like that. We're never going to change that. But all we're doing as a software company is developing tools that make it clearer and more understandable to engage with that methodology. So that's really everything that we develop, is just about how can we make it more user-friendly, more clear, and more, take more of the guesswork out of things. So we got some cool stuff we're going to develop, and we hope you guys are along for the ride with that, and should have some cool things happen this year. So again, I want to thank you guys so much for being on the webinar, and until next time, we will see you guys next week. And like Shane said, if you guys need any help, you can send in your screenshots to support@tradeats.com. We'll be more than happy to continue the conversations with you guys there. So everyone have a great day, night, or afternoon, wherever you are, and we'll see you next week. Thank you so much.